Hi, and welcome to another edition of our weekly market outlook report. Today we'll be looking at Gilead, Pfizer, and Regeneron. All three companies are potentially linked with the development of the vaccines and the treatment for COVID-19 virus, either as a cure or a possible treatment as well. Now, let's start with Regeneron first. This is the daily chart for Regeneron Pharmaceuticals. The price action is currently quite bullish considering the recent market volatility, creating higher highs and higher lows, and the current price is trading above 20, 50 and also 200 period moving averages, and this is a daily chart. The initial support to the downside is at 450 level, which is this red line here, our 20-day moving average. And upside is capped by 515 level. This appears to be a sideways consolidation with a bullish breakout higher. Bulls are in complete control above 450 level, so either a corrective pullback into 450 and a rally higher, or a gradual move and a breakout above this current swing high at 515 would be perceived to be quite bullish for this particular share, opening the way for an extension to the upside, targeting additional upside resistances towards 528, 544, possibly even 550, which would be nice and round number. Alternatively, if we see a corrective pullback and the loss, the end of day close below 450, that would negate the current bullish outlook, potentially opening the way for a deeper corrective move, targeting additional support towards 428, possibly even 400, which would be our 50, very close to our 50 period moving average as well. The oscillating indicator is crossing over from neutral as well, so it could be an excuse for a volatile move going forward. Pfizer is also developing a potential vaccine or a treatment for COVID-19 in partnership with BioNTech, which is a German pharmaceutical company as well, which had a massive rally yesterday. The Pfizer is less bullish because we have a current price downtrending. It's below 20, 50 and 200 period moving averages, and if we take a look at a daily time frame, a longer term view from kind of middle of 2017, we're seeing that these clusters of the lows have been tested and lost. So the psychological level going forward for Pfizer is at 30. That's the big level. We can see there was a buying interest around that level, and the current oversold bounce back is respecting that level as a very important, I would say psychologically important support. Upside is capped by 33.23, so if we see a pullback into 30 and rally, or a gradual move higher and a breakout above 33.20, 33.23, that would be perceived to be quite bullish, potentially opening the way for a spike higher, targeting initial resistance at 34, which is our 20 period moving average, followed by 35 and subsequently by these clusters of the lows towards 36, 37.50. We can also draw a trend line in this case connecting this sequence of the lows, so if the price goes into that level, it's likely that we could see a bit of a consolidation or some resistance. Alternatively, if we see, that will be basically the bullish outlook. I'm looking at it from a bullish point of view, in addition, because we are seeing a bit of a divergence here between the price creating lower lows and the oscillating indicator, basically a dumb, unemotional mathematical formula. It's creating a higher low here, so there is a positive divergence between the price and also the indicator, which is crossing over from close to the oversold levels. Alternatively, if we see a pullback lower and end of day close below 30, that would change the outlook, potentially opening the way for a deeper corrective to the downside, targeting 29 followed by 28, 20, 28, 25 supports to the downside. Lastly, let's talk about Gilead. Gilead is also uptrending quite nicely. We saw that there's a substantial amount of sideways consolidation in Gilead, and then we saw this massive spike higher, corrective move, and now a bounce as well. So the Gilead is currently trading above 20, 50, 200 period moving averages. Stochastics is crossing over from fairly close to oversold. The price is supported by 70, which is nice and round number, and it's capped by 76 to the upside. So either a pullback to 70 and a rally, or a gradual move higher and a breakout, the end of day close above 76, would appear to be quite bullish, potentially opening the way for a spike higher towards additional resistances at 78.80, possibly 80.50, on the way to 81.82. Alternatively, if we see a corrective pullback and the loss of 70, the end of day close below 70, retest of that level from underneath as a newly found resistance, because it's been tested in the past on a number of occasions as resistance, resistance, resistance. Now it's our support. If we see a loss of that level, that would change the outlook, potentially opening the way for an extension to the downside, targeting 68.20, possibly 66 or 65. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.